This is the Southern Silver Report. I am your host, Brian. On today's episode, rather than looking at some type of investment vehicle, like the rise and fall of the SLV ETF over the week, or what's going on with the Shanghai Gold Exchange, I think it's important that we take a bird's eye view and look at how Gen Z is beginning to invest their money into silver. Now, for those interested, silver, as of the closing bell in the US, rose to $87, an increase of $2 on the day. But the premium in Shanghai, where they primarily deal in physical silver deliveries, is still significantly higher than that of the United States. One wonders how a physical market like the Shanghai Gold Exchange could ever not lead price discovery for an industrial commodity. The current gold-silver ratio hovers around 50 to 53. Now, Gen Z, we need to talk. Most people assume that Gen Z does not have any money, and this is broadly true. The economic metrics for those in my generation are not always the most positive. But that doesn't mean that Gen Z will never come into money, that those in Gen Z don't earn salaries that are significant, that they don't put their money into investments. And so I want to break down the case for why many in Gen Z are beginning to invest seriously into silver, rather than alternative forms of investing, like, say, crypto or fine art, or, I hate to say this, but some people suggest that putting a parlay on your favorite sports team is investing. No, John, it isn't, but I'm happy that you think so. No, the reasons why Gen Z are going to invest their money in silver is, I think, twofold. Firstly, a broad distrust of institutions, and secondly, a general desire to hedge against market volatility and what they view as calamity. Now, I think these do go hand in hand, but as somebody in Gen Z, I feel it's important that maybe we discuss the second part first, the hedge against calamity. For most of my formative years, I saw economic hardship. I saw the traditional world flip on its head. The advice of going to college isn't wrong. Education is a great equalizer. But the reality in our modern day in the United States is that education doesn't always pan out, even for those who put their time and effort into earning a degree in machine learning or computer science. The skills required, the expectations of employers, they say that the only constant in life is change. But when that change occurs in the span of several months, rather than several years, well, you have a recipe for a lot of uncertainty. And seeing that uncertainty, people begin to put their money into what they see as a haven asset, as a safe investment. Hard commodities, gold, silver, palladium, platinum, copper, wheat, if you want to get into agriculture. That's certainly not my field, but you get the point. They put their money into things which are fungible assets, where the value is not likely to spike, but it could grow over time. Silver, the spike that we saw back in January, I don't think most people could have predicted that run up that quickly. And of course, there was brief overheating. In the last week, we've seen silver prices begin to rise, but they're nowhere back down to what they were this time last year. For those Gen Z who put their money into silver, whether it was paper or physical, even as recently as 2024 or 23 or 22 or 21, you would have, had you sat on it, gotten quite a nice return, all while doing the one safe thing that still felt safe. Because you're not going into debt to buy silver. You don't need to take out a loan to do that, as you do with education. You see where I'm going with this? Somebody working a basic retail job, living at home, trying to stretch their budget, can still invest in silver comfortably, even if it's just an ounce or two here and there. The second reason I would like to discuss is a general distrust of institutions. Now, whether this is misplaced distrust, whether it's just a bunch of populist rambling, who's to say? I think it depends a lot on the person. I think it also depends a lot on how old you were when the 2008 housing crisis happened. I know that event radicalized many people, but the general through line is that to many in Gen Z, they feel as if the legacy institutions are not equipped or are too slow or lack the teeth required to properly handle things such as a market correction that spirals into a recession, which could spiral into stagflation, which could potentially lead to worse things as the United States currently is engaged in conflict abroad, which historically that has meant a ballooning of the national deficit. It has meant increased inflation. It has meant a number of very bad economic metrics. Now, silver and gold are not inherently tied to that. Market analysis typically shows oil and silver as one example. They trade back and forth, so when oil is up, silver's down. Silver is up, oil is down. The USD is up, silver's down. The USD is down, silver is up, and so on and so forth. But broadly, it's much more of a cultural thing. Much more of a, we don't know whether we can trust the people in power to do the right thing until they show us that they are doing the right thing. And so many in Gen Z say, well, I can trust the guy at my local shop selling me silver, or the online store where they have a guarantee of authenticity for numismatic pieces. I can buy gold from reputable dealers. I can hold that physical asset in my hands, and should a time come when I need to liquidate, I can more than likely get that accomplished. Now, as we saw in January, February, and March, refineries, they had to slow down their acquisition of metal because of a lack of reagents. But in a normative year, in any other period of run-up that we've seen in this market, that is broadly not the case. I don't remember it ever being as bad as it was just a couple months ago. And you could honestly strike that up to any number of factors. I mean, supply chains are always tricky. I know that firsthand. I remember doing supply chain work in COVID. That was a time to be alive and working. So I think for those in Gen Z looking to put their money somewhere, silver is the place that a lot of them are looking, because crypto and other assets, they have a level of trust, but they don't have the same level of trust. There's that human factor missing, I suppose. That other humans have vetted that this product is real and it can, do what it says on the tin. Silver also has a lot of cultural weight, but crypto does not. And so I think, broadly speaking, there aren't going to be a lot of people in Gen Z investing in silver at, call it, 20% of their portfolio. But certainly 3, 5, 10% is likely going to be more common in the near future as we see the inflation potentially increase over time, and this generation wanting to secure their wealth for the long term. Thank you for listening to this episode of the Southern Silver Report. I aim to publish twice a week, whether it's more thought-provoking work like this or market analysis. I hope that you will subscribe and share this with someone who you feel may benefit from this content. Until next time.